You're listening to the Homeownership podcast by Momentum Realty, real estate talk for buying, selling, and owning property.
Hey guys, Sean Patrick Queally here, broker owner of Momentum Realty, located in Hanover, Massachusetts. Welcome to episode 12, part 2 of buying and selling a home with a VA loan with Patrick Queally of Hancock Mortgage Partners. Well, one of the most important questions that I have for you, interchangeably the word inspection and appraisal are used here, but the reality is it's a VA appraisal. So we have the common misconception of that a VA appraisal is the scariest thing in the world and we all need to be scared of them. Tell me a little more about the VA appraisal, and then also tell me a little bit more about if one goes wrong, what can be done, and what can the buyer themselves pay for if need be.
Yeah, so there's a whole slew of topics there. So a lot of people in the real estate community will complain or be fearful of a VA appraisal. One of the complaints is, well, they take too long. Nothing could be further from the truth. There are only a certain number of appraisers in each state that are approved to do VA appraisals, and they're under mandated turn times. So they have to make contact with the listing agent, whoever the representative is to show the property. They have only a certain number of days to complete and turn in that report. So they're under very strict time guidelines, turn times as to when that report needs to be finished. So the complaint that a VA appraisal takes too long is just crap. It's not true. Okay. So the second complaint that I hear often is that a VA appraisal never comes into value. A VA appraisal is always going to come in low. And again, it's just not true. A VA appraisal uses the same methodologies as any other appraisal, conventional or FHA. They're using the same information from the same pool of comparable sales. They're making the same type of adjustments on the adjustment grid to arrive at what a conclusion of value is. Now, one of the important things that most people are not aware of if they're not familiar with the VA loan program is that we actually have several opportunities to legitimately influence what that value is going to be on that VA appraisal. So you may be familiar, you may have heard the term before, tidewater. Now, a lot of people around here think that has something to do with flood insurance or being near the water. It doesn't. So when a VA appraiser inspects a property and they're having trouble reaching a conclusion of value that supports that purchase price, they're going to do something called invoking tidewater. So what that means is they're going to reach out to their contact, who's typically the listing agent, whoever they made the appointment to see the property with, and they're going to leave them a message or speak to them and tell them that they're invoking tidewater. Now, most of the time, that listing agent has no idea what that means. They think, well, hey, it's not near the water, we don't need flood insurance, has nothing to do with anything, and they simply disregard the call. But really, what happens when a VA appraiser invokes tidewater, they're telling everybody, hey, I'm having trouble reaching this conclusion of value that supports the purchase price. Please give me some additional data. Give me some additional comps. Give me some more information. Help me meet that value. Now, if the tidewater is invoked, you only have 48 hours in which to respond and provide that information. So if the tidewater window comes and goes and the appraiser is not giving any additional information, they're duty bound to complete that report to the best of their ability or reach a conclusion of value and submit that report. Now, if that report comes back and it's still not supporting the purchase price, still lower than the purchase price, we have another opportunity to legitimately influence that value. So once the tidewater window closes, we can submit that appraisal report with some additional information, some additional comps, and request what's called an ROV, reconsideration of value. So the ROV request is sent to the Regional Lending Center. So for around here, that's in Cleveland. And the VA has staff appraisers on site. And you know who works at the VA? Other veterans. And veterans want to help veterans. So the veterans that are on staff at the VA are going to look at that, and they have within their power at the office, at the VA office, to change that conclusion of value by up to 15%.
Wow.
So without any further inspections, without anything else required, not necessarily it's a rubber stamp of approval, but it's a process, a mechanism inside the VA where they can change that field appraiser's conclusion of value based on the additional information that's provided up to 15% of that original value. So when someone says, well, VA appraisals never work out, they never come out to value, they always come in low. So you don't know what the hell you're doing. There are ways to legitimately influence that value and try to help that veteran get into that home. Now, if the home's way overpriced and there aren't any comps to support it, well, you're just not doing a good job as a listing agent. You haven't priced it appropriately.
Right, and that's something that, again, when you're hiring an agent, you want to look at list to sale price ratios and seeing what people are listing homes at and selling them at. And also you as the homeowner and seller need to be honest to yourself, because no matter who, whether it be VA, FHA, conventional, when you miss on an appraisal, it's always an awkward moment. It's always late in the game. And the reality is when you go back on the market, if you do have to go back on the market, you have to tell everybody that you didn't appraise out correctly. And it's going to mean a price adjustment late in the game. So chances are you're going to end up negotiating and losing some money.
Of course.
And it's really not money lost. It's just that you asked for too much at the beginning.
Sure.
So leading the market in one way is a good thing, as in, the market's climbing. You want to get the most money, but at the same time, you don't want to end up messing up your own transaction by getting greedy and trying to get too much.
Sure.
Let's pop back into that VA appraisal real quick and talk about the different conditional items that can come up.
Yep. So the condition of the home is important, but that's important on any type of appraisal, any type of loan product. So VA does have some specific specs, but they're not some wild, highly lofty goal. One of the common things that typically comes up on a VA appraisal, similar to an FHA appraisal, is if there's any chipping or peeling paint. So interior or exterior, if there's chipping or peeling paint, the VA is going to require that get addressed prior to closing, which means that area needs to be scraped and repainted. Now, many sellers that I've come across in my career involved in a VA transaction will balk at that, and they'll say, no, that's a arduous request. We shouldn't need to do that. There are some that will fix that issue. They knew it was going to be an issue going in, but you do have some, for whatever reason, difficult sellers that don't want to do that. It certainly is possible, however, for the veteran to hire somebody to come in and rectify that situation. So the chipping and peeling paint needs to be addressed, but it doesn't necessarily need to be the homeowner, the seller, that pays a contractor or does it themselves, to rectify that situation. 100% absolutely legitimate that the veteran can pay for someone. Now, I'm a proponent of trying to keep as much money in the veteran's pocket as possible. I think that the seller should accept responsibility to repair that. But if we're at a complete impasse and they absolutely refuse to, it is possible for the veteran to go out and hire somebody, of course with the seller's permission, have a contractor come in and fix that issue.
I've actually been on some deals where the home seller refused and the home buyer said, hey, can I do it myself? And with permission from the attorneys, we were able to get a certificate of hold harmless agreement that we could go work on the home. And we actually went and painted a few things. And I guess one misconception that I want to clear up is just because it's peeling or chipping paint doesn't mean you need to repaint the entire exterior. You need to deal with the areas of concern. And they're not saying that you need to be the Michelangelo of painting. You just need to take care of the areas of concern, which means that there's no loose edges or anything. So we're not talking a full rehab paint job. We're talking get it buttoned up and get it cleaned up so that it can pass the appraisal.
Yeah, most of the time when I see that come up, it's really sort of a handyman repair. It's a guy with a small bucket of paint and a step ladder that can fix the areas of concern. It's like I said, it's not a full, exterior repaint the entire house type of deal. I mean, if the damage is that severe, that's going to show up on any type of appraisal report, not just a VA.
One of the things you mentioned is you were going to bring in a list today. Maybe I can make that publicly available on the blog in the future. So if anyone wants to run over to our blog site, we'll have the list available. So Patrick, one of the most important questions that I wanted to ask you is, how does someone start the process of getting a VA loan? Is it any different than another loan? Is there anything special?
Well, yes and no. So you obviously want to have all of your financials together, pay stubs, W-2s, tax returns. You want to have your bank statements together. But some of the unique features of a VA loan, like we mentioned before, we'll call the holy grail of whether you qualify for a VA loan or not, is a document called the Certificate of Eligibility, COE. Now, the veteran certainly has the ability to order one themselves online. However, in most cases, we actually order it for the veteran. The most useful document for us to be able to order that COE is if the veteran has their DD-214, their discharge papers. With the information from the DD-214, we can absolutely order that certificate of eligibility. And that's really the only extra piece when it comes to starting the process that a veteran would need to be aware of.
Does a person doing this loan with you, do they typically go online to start it? Do they come into your office and sit down one-on-one?
It's a whole mix. It really just depends on the comfort level of the veteran. So quite often it starts off with a phone call. And depending on how that veteran wants to proceed, my doors are always open. They can come in and meet face-to-face. However, with everybody's busy schedules nowadays, a lot of times from that initial phone call, it does move online. And I do have, online qualification forms, and I have secure portals where they can upload their documents. That seems to be a lot of times the faster, more efficient way to do it. But of course, again, my doors are always open. I do have veterans that want to come in and meet face to face and shake my hand, and I'm always welcome. They're always welcome. Grateful for that opportunity for them to come into the office for sure. Yeah,
because as you know, some people love the online portal, think it's the best thing going, and then other people think it's the devil, and they don't want to put their things in the computer.
Well, exactly, yeah. They don't want anything floating around on the interwebs. They want to come in and deliver it in person, which is perfectly fine.
Excellent. One of the other questions that I commonly have gotten asked over time is, if a veteran buys a home, they have a current home loan, and then they get actively deployed, is there any such thing as putting their payments on hold?
Well, not exactly. So it really depends on the loan servicer. So the best advice for that veteran is to reach out to the loan servicer and let them know what's going on. With the status of being a veteran or being active duty and being deployed, I would certainly like to think in my heart of hearts that the loan servicer is going to step up and do the right thing and do everything they can to defer payments or to help that veteran out. But there's no universal across the board guarantee. Now, if that veteran does fall behind on payments, in every state there are procedures in place to prevent that home loan from actually going into foreclosure if there is, that bar where that veteran is actively deployed. And it's actually called the Soldiers and Sailors Act.
Excellent. Yeah, because ultimately I do believe when they're at active deployment, they're getting paid on the regular anyways. So the bank, there is a way to make payments and everything.
Exactly. So, again, with so much of the world being online, it certainly is possible in most circumstances, I suppose, unless they're, in an active combat situation, where a veteran can log in and send payment to that loan servicer.
Right. Another question I had is, I've heard of reassignment of VA loans and the VA eligibility certificate and CEO, as you call it. If a veteran goes to give a family member or whoever qualifies their loan, does it change their certificate of eligibility, and where do they stand there?
Yeah, so what I think you're referring to is the assumability feature of a VA loan. So while VA loans are assumable, so let me just define what that means. So what assumability means is that a new person, so a veteran takes out a home loan, they have a mortgage on that, and for whatever reason, they're moving on from that home, but they're not selling it. Another individual can come in and assume that home loan, which means that new individual is taking over the payments that the veteran had agreed to when they took out their mortgage. Now, for that assumability to go into effect, that person, the new person that's assuming the loan, still needs to be qualified. The loan servicer has to approve that exercising that assumability feature of the agreement. But what I'll say is, if that person that's coming in that is assuming that note, if they are not a veteran, you're doing the veteran that's leaving that home, you're doing them a great disservice. Because what happens is their eligibility for VA financing is now tied up in that home that they're moving out of, that they're moving away from. And it may limit or flat out stop them from being able to purchase another home using their VA benefits. Now, if the person that's assuming that loan is also a veteran, well, that can work out just fine, because when that new person, that new veteran assumes the loan, the veteran that originally purchased the home, their eligibility is restored. So they can now use their benefits to go purchase the next home. The benefits are really, when you're assuming that loan, you're assuming all of the terms. So let's say the veteran has a rate of 3.5%. And if mortgage interest rates are 5% currently, well, it certainly makes sense for the person assuming the loan to take over the payments at a 3.5% rate rather than taking out a new mortgage at a 5% rate. But again, if the person assuming is not a veteran, you're doing the veteran that's moving on a disservice, because now you're tying up their eligibility from being able to purchase another home.
Well, I'm glad you cleared that one up for me, because the only time I have seen this done was veteran to veteran, and there was a process that was involved with changing it over. They did use the right to the assumability of the loan, and it worked out great for the both of them, and now I'm actually working with the veteran who originally owned the home to find a new home, and the new veteran is in there. And the reason they did it was exactly what you said. The interest rate at the time was unbeatable today, so why not take over the loan?
Yeah, so a side note, the veteran who moved on from the home, the veteran who had the note assumed, they should contact the VA to get their eligibility restored.
Excellent.
So they're going to need to get a new certificate of eligibility, and that's going to involve a call directly to the VA to make sure it gets restored in full.
So I've asked you several questions today, Patrick, and gone over a lot of things. Did you have anything extra that you think I missed, or maybe you just want to tell the audience that is a good idea, both buyers or sellers, or even people who currently own a home that's, on veteran status?
Yeah, so for the buyers out there, the media has trained consumers to shop for mortgages based on two features. What's the rate and what's the closing costs? Now, both of those are important features. However, I would make the argument that as a consumer, whether you're a veteran or a civilian, you should be interviewing that loan officer to figure out how qualified they are. Because really what you're doing is you're hiring that loan officer to help you create a mortgage debt of several $100,000. Okay, so you want to make sure that loan officer knows what they're doing. And in a complicated or convoluted process such as mortgage financing is, a lot of times it's not a question of if something is going to go a little bit sideways, but when something goes a little bit sideways. You want to make sure that loan officer is knowledgeable, competent, and experienced enough to deal with whatever it is going sideways and still get you to the closing table, safely and on time. And especially when it comes to the VA loan program, there are so many pieces of the puzzle that are just misunderstood, misapplied when it comes to calculations. You really want to deal with someone who is a veteran advocate, and humbly, I'd certainly put myself in that category. So it's more than just the rate and the fees. You want to make sure the loan officer is knowledgeable and competent and can get you to the closing table.
Sure. So I think what you're referencing there is basically a jack of all trades and master of none. I think that you are part of a group. I believe it's called Mortgage Masters Boot Camp. What is the group name?
It's the Military Mortgage Boot Camp. So we're a group of a couple of hundred loan officers across the country, and we have a real passion for serving veterans, for serving those that served. A number of the individuals in the group are actually veterans themselves. So as a civilian, like I am, it certainly is just a great knowledge base to be able to go to my fellow loan officers, some of which are also veterans, and be able to discuss issues and problems and how to overcome obstacles to help that veteran get to the closing table and own that home.
Obviously, you can reach out to Patrick directly with any questions on that. He's right over there at Hancock Mortgage Partners. You can find them on the web as well as, why don't you give him your cell phone number here?
Yeah, so the best way to contact me is always my cell. That number is 781-888-5678.
Well, Patrick, as you know, this is a massive subject. I think we went over a lot today. There's a lot for buyers and sellers as well as homeowners to listen to here. I look forward to meeting with you again. I'm sure we can elaborate on this subject and do another thing. Thanks for coming in today.
Absolutely. I'm grateful for the opportunity. Thank you.
If anybody has any questions, comments, or concerns on this or any other topic that we've covered, please feel free to reach out to me via email, message, call me, whatever works best for you. Thank you for listening this week. I look forward to talking to you next week, and everyone have a great week. Thank you.